All right, why don't we start off with this? This new tariff announcement, the fact that there could be other announcements before August 1st. Again, it seems like a fluid deadline. What area of the emerging markets and frontier markets is the most sensitive to all this?
Yeah, certainly. I think, Frank, one area that it's not in the emerging markets, but certainly Japan, they've got a big election coming up. So I think there's going to be some domestic pressure on conceding to President Trump. So Japan's probably in a little bit of a tougher position. Where I think in the broader emerging markets, particularly in Asia, the U.S. is such an important market that those global leaders, those local leaders, are going to play ball just because what sort of they don't really have much of a choice.
All right, so you're saying they don't have much of a choice. I think that's what the president hopes is the case in these active negotiations going on. I also want to talk to you about the weaker dollar. I just mentioned a minute ago, Jeff Cox on CNBC.com doing a great story. The dollar coming off its worst first half of the year in over 50 years. What does that softer dollar mean for some of these other economies out there? I want to go past Japan. That's a developed economy. But some of these emerging and developing markets that a lot of investors have seen opportunities in the first half of the year.
Yeah, 100%, Frank. I mean, this significant outperformance over the last 16 years of U.S. equities was really aided by a very strong U.S. dollar. From April of 2011 up until 2 years ago, the U.S. dollar index was up 55%. It's fallen 20% since then. So for foreign investors who have 17 trillion of capital invested in U.S. equities, the dollar's weakness is really weighing them. That if you're a euro denominated, a yen denominated, a Taiwanese dollar or Singapore dollar, all of these foreign investors are underweight, are losing money because of the dollar's depreciation. Even though the S&P 500 is up year to date, they're actually hanging a negative loss because of the dollar's depreciation. So I think that's part of what's coming. What we're seeing is some of that money coming out of U.S. equities from non-U.S. investors, and it's going back to work. And when it goes back to work, it's going to go back into those growth stocks. And we're seeing that particularly in Asia, which has a large number of these growth stocks, these tech plays, which we hold in KEMQ, which is really what's been driving our outperformance year to date versus not just particularly the U.S. market, but even against broader emerging markets.
So I want to go back to some of the countries that are facing these new tariffs. There's 14 countries that are facing these new tariffs, pretty much going back to that April 2nd level before the tariff pause. Is there any winner in all this? We were just looking at the ETF that tracks South Korea. That was actually higher right now. Give me a sense. Can anybody actually win from all this? Does somebody benefit?
Well, I think to the president's point, he's trying to bring jobs back to America. So I think for some of these companies, particularly the Asian automakers, they've already moved a lot of that to the United States. So maybe we'll see from South Korea, SK Hynix, the big semiconductor producer, maybe they'll do a deal like TSMC to actually build a factory here in the U.S. I wouldn't be surprised by such a move. But I think in general, the U.S. is a very important market for these countries. They got to balance trade a little bit. I think the president has to be a little careful just because the U.S. is the largest exporter of services globally. So he can't overplay his hand because that could then affect a lot of U.S. companies that are selling services like software, finance, lawyers. A lot of intellectual property gets sold from the U.S., but because it's not put on a boat or a plane, it's not considered a good. So this is a goods trade war, and that's the balance that I think the president thus far has navigated, and making sure it doesn't expand into a services trade war where then some of these other countries have a little bit of a way to retaliate against U.S. companies.